What's up, capitalists? Hey, it's your intrepid guide to the 21st century, Nate Houseman here, and I'm coming to you live on YouTube, Rumble, Theta, the Theta Network, and the recording of this live stream will be available on Odyssey and podcast platforms. And so, if you're not watching right now, that's cool. You can catch me later. But I'm gonna go over some cool news stories tonight, and we're gonna talk about why the markets are crashing, why gas is up, and why the economy sucks. We're also gonna talk about why the Roe v. Wade leak happened last week, and we're gonna talk about some things that are not gonna be on YouTube. So I think like at some point I'm gonna like turn off YouTube, and we're gonna continue the conversation on Rumble and Theta because YouTube they just don't like certain topics. So did you see 2,000 Mules? I did. Yeah. So starting with gas prices, and the Gateway Pundit is just, they are just on top of things as far as like certain topics. Gas prices reached new all-time high under Joe Biden at $4.37 per gallon, second all-time high in 2 months. You have to work really hard to be this bad. So gas prices have doubled since the resident went into his little outpost there. And I think we all know why. Like he shut off, all the drilling on federal lands. He reneged on a whole bunch of pipeline projects, and he's just making it. They really want us to be stuck in our homes, not dependent on say a corporate job rather than succeeding in business. And we are reaching the end of a system that's been going on for really since 1913, but got really bad in 1971 when the dollar went off the gold standard. We just haven't been using real money ever since then. Ever since we stopped using gold for money, it's just money hasn't been real. And if you want to know why workers' wages have not kept up with prices, it's because certain things don't match with inflation, and labor doesn't match with inflation. It got really bad in 1971, and it's only gotten worse in the last couple of years, ever since the COVID lockdowns, and it's just happening fast enough that we can notice it now. So the answer to all of this is to fix the money system, and either to get back on a gold standard, get it back on a silver standard, or get back to Bitcoin. We're gonna talk about Bitcoin a little later. It's really important that you kind of take control of your money. That's how we're gonna really take back control of our lives and the political system. So let's look at some other prices today. Commodities markets on Bloomberg. Websites like Bloomberg and CNBC, they are only good for their ticker. But let's just see here. Crude oil is down a little bit. Gold is down 46%. No, 0.46%. Silver is down slightly. Corn is up. Wheat is up. Cotton is up. Cocoa is way down. And let's look at crypto. And we're just gonna scan some market analysis headline articles in a little bit here. So we'll just move on to the stock market. Yesterday, stocks closed sharply lower as the growth worries accelerate. These are a lot of these are big corporations, publicly traded companies, and a lot of people are just losing faith in corporations. Like they've examples of big tech media companies like Disney. even companies that just have, you know, questionable advertising, a lot of people just don't want to deal with certain companies. Coca-Cola is another good one, another example. Like they protested against the election integrity laws in Georgia, and people have punished them in due course. So that's yesterday. Stocks are somewhat mixed. It looks like tech stocks are weighing down the overall stock market. Stocks ended mixed Tuesday. This is from TheStreet.com. Investors attempted to tame a 3-day sell-off on Wall Street that wiped away trillions in value from global stock portfolios. The Dow Jones ended down 84 points, while the S&P 500 is down 16%. Growth concerns intensifying amid China's ongoing COVID crisis. Yeah, China decided to lock down the country again. Kind of makes you wonder what they're, preparing for. Rightful President Trump has said, "Oh, they're going to try to invade Taiwan." We're watching Ukraine right now. Russia invading Ukraine. Trump says Taiwan is next. So the whole lockdown in China might be a pretense for something else, like some other preparations. But there's also the Federal Reserve raising interest rates. That's the cost of borrowing money, and a lot of investors, they borrow money in order to invest. Like a lot of banks invest in the stock market. It's almost like the Federal Reserve and the Treasury, they print the money. It goes to the commercial banks, and a lot of commercial banks have investment departments. So that goes to the stock market. So in a way, the Federal Reserve is like, the stock market is like corporate welfare. The banks are middleman, but all these publicly traded corporations, they get money from the government in a sense. So, but one, and that's why the stock market just blew up in the last really since all the money printing started in 2020, because some of it went to regular Americans in their stimulus and unemployment checks, but the bulk of it went to stocks, and some of the biggest stockholders are corporate executives. So that's why we had such a huge transfer of wealth, because when the Fed prints more money, the dollar loses value because it becomes less rare. So people's buying power went down. So now that the Fed is supposedly saying they're going to get tough on inflation, try to tamp it down through interest rates, that's causing a correction in the market, and it's causing a correction in Bitcoin as well. But we're going to see later how we really should view Bitcoin separately. So Bitcoin has found support at the $30,000 range. Altcoins, those are any cryptocurrencies that are like other than Bitcoin, they outperform. Bitcoin stabilizes around 30K. It dropped down from like the 40 something range down to 30 just in the last few days. And 30,000 has been kind of a well-known support level really since over the last couple of years. So we'll see if this holds. But I was watching Kitco News on YouTube, and they said, yeah, a lot of investors treat Bitcoin and cryptocurrencies the same way they treat tech stocks on the stock market. They kind of think of Bitcoin kind of like lumped in with, say, big tech like Facebook or Twitter or Amazon or Apple, and with people like dumping their tech stocks over censorship issues, they kind of throw in Bitcoin with the bathwater. But Bitcoin and cryptocurrency is something new. Like you got to think of Bitcoin kind of like as digital gold. So that's kind of what helps me think of it as far as like how it can be used as currency. For thousands of years, people used gold and silver as money. They would stamp gold coins and use that to pay for things. The only problem with gold is that it's heavy and it takes up space, and you need to put it in a bank or somewhere else secure to keep it from being stolen or just to keep it safe. And paper money developed as a way of just as a certification of that you had gold in bank. So if you gave someone like cash money to pay for something, that just transferred ownership of your gold to the person, to the merchant, or to the professional, or whoever who's working for you. So over time, the Federal Reserve came around in 1913 under questionable circumstances, and later, America's gold supply was nationalized. It was all put into Fort Knox, another like government facilities. So, and nominally the dollar was pegged to gold, like cash in your wallet meant that you owned some of the gold in Fort Knox. But that ended in 1971 because before that, in the 60s, LBJ, President Johnson, he ramped up government spending more than ramped up the debt more than what we had in physical assets. So in 1971, President Nixon was forced to take the dollar off the gold standard to help pay for all the debts like the Great Society and the Vietnam War. So, and ever since then, we've just had fiat currency, which is paper money supposedly backed by the government. And is the government really worth trusting? So Bitcoin came around in 2009, and it was meant to be thought of as digital gold. When the dollar was taken off of gold in 1971, gold then became an asset that you invest in. Like you can buy gold, it's worth a varying amount of money based on the markets, and it's something that you can keep in your portfolio. Bitcoin, if you think of it like digital gold, think of it like gold that's decentralized. It's spread out on the software that runs Bitcoin is spread out on computers all over the world. Like no single person or company or organization or government controls Bitcoin. It's decentralized, and it's limited in supply. There will only ever be 21 million Bitcoin divided up by 8 decimal points called Satoshis. And right now you can buy Bitcoin, you can invest in it. It'll go up and down in value. It's speculative, but at some point we're going to have to like ditch the fiat currency system and go back to sound money. And Bitcoin will be one option for that. So we buy Bitcoin now, but at some point we're thinking like maybe in the I think they're calling it the inflection point, or the I forgot the term used by Kitco, but at some point we're going to actually use Bitcoin as units of value that we can use as payment. And the infrastructure isn't there yet, but people are just need to understand how Bitcoin works, and they're still learning. So let's read this article by BitcoinMagazine.com. BitcoinMagazine.com is like a libertarian's dream. They've got a really good. I read from them last week on the stream, and how governments basically use corporations as extensions of themselves. Right now, we're going to see how banks trying to discredit Bitcoin. Each year, Bitcoin continues to grow in stature. Bitcoin is going mainstream by every metric: financial value, adoption rates, transaction volume, you name it. But not everyone's happy Bitcoin adoption is growing. In particular, the banking industry feels threatened by Bitcoin's rise and continues to wage war on the cryptocurrency. The banks don't like Bitcoin shouldn't be a surprise. Satoshi Nakamoto's invention is the greatest disruption to the age-old monetary system in decades. As a peer-to-peer network for creating and exchanging value, Bitcoin may render banks useless. To protect their position, bank institutions have resorted to the classic tool of warfare, propaganda. By spreading misinformation, banks hope to discredit Bitcoin, reducing public opinion and encouraging stricter regulation. A brief history of big finance's propaganda war against Bitcoin. From the outset, big finance must have realized Bitcoin could potentially disrupt the banking system, but they chose to believe its use would remain restricted to drug dealers, computer geeks, cypherpunks, libertarians, and other fringe elements. But as cryptocurrency adoption grew, especially among institutional investors, panic spread in the banking system. For the first time, the possibility that this magic internet money may displace banks was real. Thus, banks launched a coordinated effort to discredit cryptocurrencies. Bitcoin was and is a favorite target, given its status as the world's first and most popular cryptocurrency. In 2014, Jamie Dimon, favorite punching bag of this program, the billionaire president and CEO of JP Morgan Chase, America's largest bank, declared Bitcoin a terrible store of value at the World Economic Forum in Davos, Switzerland. However, that didn't stop the state of New York from issuing licenses to Bitcoin exchanges the following year. Dimon followed up with his criticism of Bitcoin in 2015, saying the cryptocurrency would never receive approval from governments. In his words, no government will ever support a virtual currency that goes around borders and doesn't have the same protocols. Not satisfied, the JP Morgan Chase Supremo launched its biggest attack on Bitcoin yet at the 2015 Barclays Global Financial Services Conference. Not only did he call Bitcoin a fraud similar to Tulip Mania, but he also threatened to fire anyone who traded Bitcoin via his company. Dimon isn't the only big finance stalwart who has continued to undermine Bitcoin. President of the European Central Bank, Christine Lagarde, has also been critical of Bitcoin. At a Reuters Next conference, Lagarde branded Bitcoin as a highly speculative asset, adding that has been used to conduct some funny business and some interesting and totally reprehensible money laundering activity. This is even as the European Central Bank was considering launching its digital currency called the digital euro at the time. And Bitcoin is speculative right now, and it's a very volatile and very high performing asset. But like I said, right now you invest in Bitcoin, later you do business with Bitcoin. The European Central Bank, too, has often lent itself to the anti-Bitcoin propaganda campaign. In its 2021 Financial Stability Review, the apex banker compared surges in Bitcoin's price to the infamous South Sea bubble. Bitcoin's exorbitant carbon footprint and potential use for illicit purposes are grounds for concern, it added in the report. Even the world's largest financial institutions have also joined in on the anti-Bitcoin party. For example, the World Bank refused to support El Salvador's plan to adopt Bitcoin as legal tender, adducing environmental and transparency shortcomings of the cryptocurrency. The International Monetary Fund also urged the Latin American nation to drop Bitcoin earlier this year. Of course, there are many, many more instances of old money institutions sowing doubt and spreading misinformation about Bitcoin. Nevertheless, these statements all point to the same conclusion. Banks hate Bitcoin and will stop at nothing to discredit. Some financial players have taken another tack in their disinformation campaign. This involves criticizing Bitcoin, but praising the underlying blockchain technology that powers the system. And this is where their central bank digital currency, notion comes, where countries are going to start, creating digital dollars and digital euros. This is money. This is electronic money that's controlled by central banks and central governments. But it's not a true cryptocurrency because it's centralized. It's controlled. Banks see the potential of blockchain technology to revolutionize payments and want to co-opt the technology for their benefit. For example, JP Morgan Chase, the avowed Bitcoin critic, has created a so-called cryptocurrency called JPM Coin, running on its Quorum blockchain. Central banks have also touted blockchain's capability to power central bank digital currencies, cryptocurrencies issued and backed by governments. Such assets are pegged to a fiat currency, like the dollar or the euro, much like a stablecoin. And stablecoins are examples of cryptocurrencies that are like pegged to the dollar. Like you can use them in cryptocurrency exchanges to like buy and sell or trade different various other cryptocurrencies. The most popular or most well known stablecoin is Tether. You and I use Tether on my on my on my account with Pionex. So Pionex is a cryptocurrency exchange. You put some money in it, and you can assign like a trading bot to buy and sell for you. But you have to use the Tether coin to do that. You really can't use digital dollars. So one Tether is supposed to be equal to $1. So that's what a stable coin is. Getting back to the article. The Bank for International Settlement ripped into cryptos in a June 2021 report, describing them as speculative assets used to facilitate money laundering, ransomware attacks, and other financial crimes. Bitcoin, in particular, has few redeeming public interest attributes when also considering its wasteful energy footprint, the report declared. Ironically, the BIS advocated for CBDCs in the same report. Here's an excerpt. Central bank digital currencies represent a unique opportunity to design a technologically advanced representation of central bank money, one that offers the unique features of finality, liquidity, and integrity. Such currencies should form the backbone of a highly efficient new digital payment system by enabling broad access and providing strong data governance and privacy standards based on digital ID. The Bitcoin bad, blockchain good line has become a favorite refrain of banks and fintech operators in response to Bitcoin's popularity. As always, this argument misses the point. Without Bitcoin's decentralized architecture, blockchain-based payment monetary systems are useless. Permissioned blockchains, like Quorum, suffer from centralization and single points of failure, problems Nakamoto sought to correct by creating Bitcoin. The same issues plague CBDCs. As this author explained in a recent article, centralized control of a digital dollar or pound caused the same problems witnessed with fiat currencies. With central banks controlling every inflow and outflow of money, it'd be all too easy to conduct financial surveillance, implement unpopular monetary policies, and conduct financial discrimination. Yeah, if you say if the government doesn't like your political stance, your political position, or if you have bought too much, gasoline or fossil fuels in the previous month, they can actually shut down your account. That's the fear that people have with central bank digital currencies. So a bigger problem with this line of argument is that it fails to consider Bitcoin's biggest strength, crypto economics. Satoshi's greatest contribution was a novel combination of economic incentives, game theory, and applied cryptography necessary for keeping the system secure and useful in the absence of a centralized entity. Centralized blockchains with poor incentives are open to attack just like any other legacy system. So why are banks scared of Bitcoin? Traditional banks have long made money by charging users to store and use their money. The average account holder pays account maintenance fees, debit fees, overdraft fees, and a plethora of charges designed to profit the bank. All the while, the bank loans out the money sitting in the account while giving users only a fraction of the earned interest. Yeah, that's the bank's biggest moneymaker. They loan the money. They're only required to keep maybe 1/10 of the actual money in the bank. They loan it out to other people and businesses, and then they make the money back with interest. That's called fractional reserve banking. Bitcoin, however, poses a threat to the banking industry's revenue model. With cryptocurrencies, there are no institutions helping users to store, manage, or use their money. The owner remains completely in control of their Bitcoin. But wait, there's more. Bitcoin makes it possible to transfer money to anyone, instantly, irrespective of the amount involved or the recipient's location. And users can do that without relying on an intermediary like their local bank. On average, Bitcoin-powered transactions are faster and cheaper than transactions through banks. Consider how much time it takes to process an international transfer and the hefty fees that banks charge. Except for minor fees, people are not paying anyone else to process transactions on the Bitcoin blockchain. Amounts of any size, large or small, can be moved without the usual red tape. In less than 10 minutes, Bitcoin processes an irreversible money transfer. Banks simply cannot match that. Store value. Banks help customers arrange long-term investments in gold, bonds, and other assets to secure the value of their money. And they charge a fee for custodianship, investment consulting, and portfolio management. But what happens when people figure out they don't have to rely on banks to store value? Due to its intrinsic properties, Bitcoin is rapidly emerging as a preferred store of value. Bitcoin is scarce. Only 21 million units will ever be produced, but it's also fungible and portable. This makes it even better than traditional stores of value like gold. Because anyone can easily buy Bitcoin and HODL, that stands for hold on for dear life, banks can no longer make money off shilling asset management plans. Banks like JP Morgan have adapted by selling Bitcoin-based investments as futures, but that won't save them. Banks have long survived by manipulating the financial system for private gains. The 2008 financial crisis resulted from underhanded dealings by some of the world's biggest banks, including Lehman Brothers, which later declared bankruptcy. For instance, banks always lend out more money than they own in what's called leveraging. Should everyone decide to withdraw their money from banks, the entire industry would inevitably crash. Bitcoin allows people to be their own banks. Money in a Bitcoin wallet cannot be manipulated or used by anybody apart from the holder. For the first time, people now have power to control their money. The intensity of the banking industry's information war shows just how much they fear Bitcoin, as they should. It's only a matter of time before Bitcoin permeates every financial sector: offshore settlements, escrow, payments, asset investments, and more. When that happens, banks will become the latest victims of technological disruption. Just as Netflix replaced video rentals and Amazon replaced bookstores, Bitcoin will replace banks. And no amount of doubt sowing and misinformation will reverse that. So, right now, Bitcoin's on sale. It's down from it's down maybe 50 some percent, 53-ish percent from its all-time high. So, but it is a pretty good store of value. So, one of the ways you can help my program and help my website is click on the referral links in the description. You can join Uphold, which is a very user friendly, beginner friendly crypto exchange, and I'll get like a referral bonus or referral commission. But you can join Uphold and buy Bitcoin and gold yourself. You can dollar cost average, which just means put a little bit of your money into Bitcoin at a time. That's the safest way to invest. Like whatever the market does, however it goes up and down, you can just be consistent, and you'll probably make a profit within a year or so. Bitcoin is a hedge against inflation, and eventually, when the whole fake money system collapses, we won't need to worry about inflation anymore because we'll have real money. And I love Bitcoin. I do think gold and silver have a place in the economic future as well. So click on the link to Acre Gold, and you can actually have gold delivered to your residence monthly. You pay a subscription fee, and whatever the price of gold is, whenever you reach a certain amount, you'll have it delivered to you. So that's another way to support yourself and support the program. Let's read another article about banks. MasterCard, Visa, and banks all profit from inflation without doing anything. Merchants pay swipe fees to accept credit and debit cards and are forced by card network rules to pass the costs onto all consumers, including cash customers, with higher prices and at the store and at the pump. As I told the Senate, whoever this author is, the big banks are happy with inflation. When gas prices double, their percentage-based swipe fee revenue doubles, without the banks making anything or doing anything. So yeah, inflation's been very good to the credit card companies, but it hasn't been so good to like the mortgage lenders or the loan officers at banks, because no one's wanting to take out a loan to buy anything big. So the prices of we've got a real estate bubble that's hopefully cooling down because of decreased demand. We've got We've got an automobile market that's like stupid expensive right now. So no one's taking out a car loan. So it's good news and bad news for the banks. So and once people realize we need to get back to sound money rather than fiat money, I think that's when we'll kind of we'll kind of get out of this mess. So that's kind of why we shouldn't worry. We need to prepare. So stock up on gold, stock up on silver, stock up on Bitcoin while it's cheap, just dollar cost average while things go sideways or down. And once the fiat system does go belly up, you'll have something to kind of like, transition into. Speaking of loans, they kind of want to. They're talking about forgiving student loans, and this is something I feel strongly about because I'm very fortunate. Like my family owns farmland, and that's what paid for college for me. So I don't have any student loan debt. But I am just irate at what my generation and younger had to deal with as far as like loans because the job market in the 21st century isn't really keeping up with inflation because of the whole fiat system, and lots of millennials and Zoomers, they're not making enough money to pay back their loans, even and even if they pay back the principal, the interest is killing them. However, it's also not right to totally cut off the loans because these student loans were backed by the government, and that's just going to transfer the debt from the students to other taxpayers. It'd be the biggest giveaway in American history. This is from WorldNet Daily. President Joe Biden wants to cancel more than $1 trillion of outstanding student loan debt. Biden has already delayed for more than a year on a student loan repayment, and under his new rules, most delinquent and deadbeat borrowers would never have to repay. What a deal for the people who never paid a dime back of the tuition money they owe Uncle Sam. This plan makes suckers out of the millions who have felt honor-bound to pay off their debts. The author's wife spent years after graduating from college diligently writing checks to pay off the tens of thousands of dollars of loans. That's the way it works when you borrow money and you sign a commitment to pay the money back. Think about what would happen if this loan repayment policy were to be implemented. Who would ever pay off a student loan ever again after this blanket forgiveness program? Who would benefit? The most recent Federal Reserve survey of consumer finances found that only 22% of families had student loan debt, and that student debt has consistently been disproportionately held by higher income families. So this is a giveaway to the financially successful students and families paid for by middle class workers, millions of whom didn't go to elite universities in the first place. Once student loans move to free college for everyone, university tuitions, which are already soaring at 2 or 3 times the inflation rate, would race further ahead of all other consumer prices. And you know why, college tuition is so crazy? Is because of government-backed student loans. If a student says, okay, I can pay now and I can pay you, the institution, the school now and pay back later, the schools are going to charge whatever they want. If you had someone with a credit card with a $10,000 or $10,000 or $100,000 limit, you could probably charge anywhere up to that if you're running a business or running a store. The Biden administration has misdiagnosed the fundamental problem here. To wit, college universities have become fat, flabby, and inefficient money burners with no accountability, no oversight, no getting rid of bad teachers and professors, no looking under the hood to see where extraneous costs could be axed, no demand on tenured professors to teach 1 or 2 classes a year. If student loan debt has to be retired, why should taxpayers pick up the tab? Why not force universities with massive endowments, in many cases in the tens of billions of dollars, to use that money to pay off the debts students incurred while they receive virtually worthless, useless sociology, gender studies, and psychology degrees? Yeah, if a customer is unhappy with the product, they should get a refund from the business they bought it from. If the student is unhappy with the education they got, they should get a refund from the school. Doesn't that make sense? This would incentivize schools to cut their tuitions and their costs, something the academic elites are desperately trying to avoid. Democrats think that buying votes this November by making college essentially free will win them elections. But there is no free lunch and there is no free college. It's just a question of who pays the piper. And it shouldn't be you. So, just a happy little thought there. One more economic story. And we'll look at why a lot of people are turning against, world corporations. Federal Reserve's Kashkari reveals an uncomfortable truth. This is from Bloomberg. And I just, badmouthed Bloomberg earlier, but we'll just kind of like pick through this article. This is Federal Reserve Bank of Minneapolis President Neil Kashkari published an essay Friday in which he admitted an uncomfortable truth. He wrote that if the supply chain disruptions don't resolve soon, the U.S. Federal Reserve may be forced to spur a recession. We're probably in a recession right now. I mean, people can barely afford to live. Kashkari pointed to the war in Ukraine and lockdowns in China related to COVID-19 as reasons why supply chains haven't returned to normal as quickly as many expected. And if factories, shipping lines, and commodity producers don't start operating more smoothly in the near future, then we will likely have to push long-term real rates to a contractionary stance to bring supply and demand into balance, he added. In other words, such an outcome would force the Fed to raise its target for the federal funds rate, currently a range of 0.75% to 1%, well above the 3% that is priced in the futures market by February 2023. So they're blaming supply chains, they're blaming China, they're blaming Russia, and you gotta wonder why supply chains are in trouble to begin with. Is there a lot of bureaucracy? Are they dependent on gas? Are they dependent on fossil fuels? Heck yeah. Who's to blame for the fossil fuel price? They're trying to blame Russia, but who killed the Keystone Pipeline on its first day in the White House, huh? So you probably heard rumblings, probably heard whispers, and maybe outright discussion of the Great Reset, the whole World Economic Forum, Klaus Schwab, all the global elites. It's almost as if they want regular people to be stuck in their little hamster dribble cages, accepting what the corporate elites, the government bureaucrats tell them, really not making a life for themselves. It's almost as if they're sabotaging the economy, and maybe they are. That's why it's so important to take control of your money. That's why it's so important to take control with gold, silver, and Bitcoin. Other cryptocurrencies like Ethereum and Polkadot and Cardano, you got to think of them as like a new form of like tech stocks. These are like projects with apps behind them, or a kind of like an environment to build decentralized, computer applications on, or websites, whatever. So you got to think of them as like tech stocks, like you would Facebook or Amazon, but not prone to the centralized problems of Facebook and Amazon and Twitter. So if you're watching this on Theta Network, that's another example of a decentralized application. It's run on the Theta blockchain, and you can run the Theta node protocol app on your own computer. You don't have to like let YouTube or Facebook host your own content. So there's that. Let's see if I have any chats. Oh, having trouble streaming to Theta. Shoot. No comments yet, but that's fine. And so you can probably see this on Rumble and YouTube. Let's move on. Walt would never allow Disney's political activism. This is by the renowned conservative Cal Thomas. He's writing on the New York Post's website. Florida Governor Ron DeSantis has signed a bill passed by the Republican majority legislature that revokes a special tax exemption and other privileges for Walt Disney World in Orlando. And really, if you consider how the actual land area that Disney World occupies, it's its own city. It's the size of San Francisco. This was in response to the company's current leadership and by some of its employees who have protested another bill signed by the governor that prohibits the teaching of gender issues in kindergarten through third grade. Activists and the media have mislabeled it the Don't Say Gay bill, though the word gay appears nowhere in the legislation. Walt Disney World was given tax breaks and was extended other privileges nearly 50 years ago, actually over 50 years ago, because lawmakers then believed it would create jobs, attract tourists, and produce sales tax revenue. It has been a roaring success, bringing $5 billion annually to the state. Until recently, the Disney organization stayed out of the culture wars and politics, preferring to maintain the vision the founder Walt Disney had for what came to be known as family entertainment. What would Walt Disney, who died in 1966, think of his company today? In Neil Gabler's biography, Walt Disney, The Triumph of the American Imagination, we learn that while Walt was sometimes opinionated, and especially when it came to his anti-communism beliefs, he wanted to keep Disneyland, Disney World, and his animated characters free of politics, preferring fantasy and storytelling. Gabler writes, Walt hadn't really been a conservative or Republican or much of anything else for the better part of his adult life. He had voted for Roosevelt in 1936, and though he had supported Republican Wendell Willkie in 1940, he declined a request from the Willkie campaign for an endorsement, writing, "A long time ago, I found out that I knew nothing whatsoever about the game of politics, and since then have preferred to keep silent about the entire matter, rather than see my name attached to any statement that was not my own." Gabler found a letter from someone who was lobbying Walt to make a film reel of flags with patriotic music. Walt responded, "I don't go in for billboard patriotism." Joe Grant, who Gabler says accompanied Walt on several wartime visits to Washington, said of him, "He was very apolitical, believe me." That wasn't entirely true. Walt joined several conservatives, writes Gabler, including Ginger Rogers, George Murphy, who later became a Republican senator from California, and Robert Montgomery, in forming a Hollywood Republican committee to counteract the more liberal progressive citizens of America. Cal Thomas says, "I see the difference as being the anti-communists were trying to defend America and its traditions, while the progressive left was attempting to undermine them. Little has changed, as reflected in the dust-up between Disney leadership and DeSantis, among other examples." Walt also endorsed Thomas Dewey, Republican Thomas Dewey, in the 1944 presidential campaign, writes Gabler, allowing a Dewey rally on the studio grounds. He also delivered a speech for the candidate at the Los Angeles Coliseum. Despite these instances and Walt's association with what Gabler calls red baiters, he deliberately kept politics out of his films and theme parks. As Gabler writes, in effect, despite his republicanism, Walt Disney belonged to everyone. It is a pattern the current Disney leadership has not followed, and why it is now suffering what should have been predictable consequences. The Disney organization should follow the vision and example of its founder and not engage in statements and actions that can only undermine his vision and the company's success. If it doesn't reverse course, it can lead to an irreparable tarnishing of the Disney brand and what has long been considered a magic kingdom. And that's the problem with so many companies right now. Especially big tech. They have gone all in on politics. They are, a publicly traded company should try to maximize its user base, its customer base. And if they're going to alienate people over by taking one political stand or another, well, they're going to be hurting the profits they're going to be hurting their profit margins and in the stock market. So should a corporation take any political stance at all? Well, maybe its members, maybe its employees can. They should do that maybe when they're off the clock, when they're not working, when they're not maybe at the jobs. Maybe they can probably have conversations with their coworkers, but their first responsibility is to the customers. So consider that. Here's one example of a company not serving the customers and paying the consequences. Elon Musk plans bloodbath for woke Twitter employees after he takes over. Report. So Elon Musk has pretty much sealed the deal, but he doesn't take full control of Twitter for probably 6 months. Elon Musk is planning to purge its woke employees after his takeover of big tech platform Twitter is complete. The billionaire tech CEO is expected to fire at least 1,000 employees, a new report indicates. Elon Musk is planning to fire 1,000 staffers at Twitter as soon as his purchase of the social media platform is complete. The Daily Mail reported, and I'm reading this off of Becker News. This is a great blog. I share articles from Kyle Becker quite often, and I kind of add my own little meme commentary. It's believed he will fire many of the firm's woke staff following the transfer of ownership, which will take around 6 months, after which Musk is likely to wield the axe. But then, within the next 3 years, Musk anticipates making thousands of new hires, swelling the ranks to around 11,000 employees, up from 7,500 currently. Numbers at the company would fluctuate, rising to 9,225 employees this year, before falling to 8,332 in 2023, the report continued. Then adding a further 2,700 workers by 2025. Most of the jobs being shelved would occur during the takeover period, according to the pitch deck Musk presented this week to investors and seen by the New York Times, the report added. While Musk expects advertising revenue to decrease to 45% of total revenue by 2028, he plans for subscriptions to pull in the remainder of the revenue, potentially adding another 10 billion. Like they've come out with Twitter Blue, which lets you it's kind of like a premium version of Twitter, like a professional version. Like you can pay to promote your posts, or you can accept tips from other people, and Twitter will take a percentage of that. So there's that. So yeah, I mean, Twitter has been a big tech, a dictator's dream. They've been like ground zero for cancel culture. They've been ground zero for the woke political movement and other corporations through their propaganda. They are awash with fake accounts and bots, and if Elon can clean that up, that's going to drive the deep state nuts. That's going to drive the corporate government banker nexus for a loop. And that's why we get stories like that's why we get stories like the Roe v. Wade leak. So we talked about that a lot last week, but this leak, this news making happens for a few reasons. One of them is they're trying to distract from a lot of other issues, like Dinesh D'Souza's documentary. They're also trying to distract from the COVID jab. Don't call it a vaccine. It's not. It's a drug. And they're also thinking, well, the George Floyd riots in 2020 were such a Great party. Let's try to do it again. They're trying to whip up a mob. Gaming journalist Simon Gwynn questions whether you would kill Supreme Court Justices Clarence Thomas and Samuel Alito given the chance. This is off Bounty in Comics, another great website. Gaming journalist Simon Gwynn took to Twitter where he questions whether you would kill Supreme Court Justices Clarence Thomas and Samuel Alito if you were given the chance. How is this not an insurrection? How is this not a call of violence? How is this any better than the video that Twitter erased of Donald Trump calling for peace on January 6th and then booting him for? By the way, Elon Musk says he will reverse Trump's Twitter ban. But we see stories like Chicago Mayor Lori Lightfoot appears to push for violent insurrection with dangerous call to arms. This is about the Supreme Court. We've got Senator Chuck Schumer endorsing criminal contest when asked if he's comfortable with protests outside the homes of conservative Supreme Court justices. Yeah, you've got bunches of demonstrations, both for and against the judges, trying to pressure a decision one way or another. You know, the Supreme Court ruling isn't official. Yeah, it's just an opinion that was written in February, and they're still trying to fine tune it. It's not supposed to be available until the summer, but there's that. Supreme Court justice is moved to an undisclosed location due to threat from pro-abortion activists. So this is Samuel Alito. He's been moved to a safe house. And it's 2022. It's an election year. It's the midterms, and they're expecting a Republican blowout, a red wave. People have seen just how toxic the Democrats are, and the left is just itching for any reason to try to repeat the conditions of 2020 when they had their supposed victory. So, and another part of that is the COVID lockdowns, the mail-in ballots. So, a few more stories, and I think I'll turn off YouTube. But 20 states threaten legal action over the Department of Homeland Security's disinformation board. This is from reclaimthenet.org. Attorneys general from 20 conservative states are threatening legal action against the Department of Homeland Security's newly formed Disinformation Governance Board, which they said will have a chilling effect on freedom of expression and described as un-American. Virginia's Attorney General Jason Miyares and 19 other attorneys general sent a letter to Alejandro Mayorkas, the Homeland Security Secretary, demanding the dissolution of the Disinformation Governance Board. This is an unacceptable and downright alarming encroachment on every citizen's right to express his or her opinions, engage in political debate, and disagree with the government, the attorneys general wrote. Republicans are taking issue with the timing of the new board, as it comes after it was revealed that the White House was flagging posts on behalf of social media platforms. Additionally, it comes just after Tesla CEO Elon Musk, a self-described free speech absolutist, made a bid for Twitter. And it came just around the time, just before, the 2000 Mules documentary. Suddenly, just as Elon Musk prepares to acquire Twitter with the stated purpose of correcting the platform's censorship of free speech, you announced the creation of a disinformation governance board as the Biden administration apparently loses a critical ally in its campaign to suppress speech it deems problematic. You have created a new government body to continue that work within the federal government. The contemporaneous occurrence of these two events is hard to explain away as mere coincidence. Instead, it raises troubling questions about the extent of the Biden administration's practice of coordinating with private sector companies to suppress disfavored speech. The Republicans also expressed concern about the leader of the board, Nina Jankowicz, noting that she is often in error but never in doubt. She claimed the Hunter Biden laptop story was Russian propaganda, a theory that has since been proven wrong. The attorneys general argued that the board is illegal because there is no statutory authority supporting its creation. Unless you turn back now and disband this Orwellian disinformation governance board immediately, the undersigned will have no choice but to consider judicial remedies to protect the rights of their citizens, the letter concludes. So, and the thing about that is, things aren't really getting worse. They're getting exposed. Like I said, corporations have been extensions of the government for many years now because through regulations and lawmaking and bureaucracy. We covered that last week. So really, big tech has been a proxy of the deep state, the far left, as far as like throttling, free speech. So now that one large big tech platform has been taken over by a free speech absolutist, the government's forced to show their hand. So they're forced to go all in and unconstitutional. So, and I think at this point, I'm going to turn off YouTube. And if you want to continue hearing some good content, follow me on Rumble. So I'm signing up on YouTube right now. Hopefully this continues on Rumble.